Thank you, Dinesh, and thanks to the CFA, which has run this wonderful series, and I'm learning all the time about a different thing every week. And that's a wonderful initiative during this lockdown. So this bank nationalization, I think it should be, I will just focus on a few economic aspects of nationalization and its reversal or its pushback in the last 30 years, and see the consequences. Just bring out some of the elements of the consequences that we have seen, including some of the consequences in emergency situations, which we saw like during the disastrous demonetization drive, as well as during the ongoing COVID disaster. Now, I'll start with the notion that banking is an industry is, I think, a completely wrong, it's a misnomer. Banking is quite unlike any other industry in the world, anywhere in the world, not just here. Why is that? And why? So it arises from what the regulator frequently, the regulator exists for that reason. The RBI and that whole apparatus exists for a reason, and that is because banks are considered systemically important. What does that mean? That means when banks are a public institution, they play a public role in the sense that they have a fiduciary responsibility to their shareholders, to their depositors, and so they can't behave like any other corporate entity, whether publicly owned or privately owned. And so therefore, that is one aspect of the thing. The other aspect of the thing is this magical property that credit has in the modern world. Credit, has a, it's not just deposits being transferred to banks which get lent onward. There is a multiplier to that. So banks have a unique ability which is not available to any other industry, any other entity, including other financial institutions like insurance and others. So banks are uniquely placed, and this is why they are heavily regulated all over the world. But over time, what has happened is that in the advanced capitalist world, they are called too big to fail. Okay. So, and now we are driven by that same logic, and we see we need bigger banks. We need bigger banks. And that is why that is supposedly the argument for, driving the merger of banks and so on, making them into a more compact number of institutions. How does this square with Indian reality? That's an economic question that needs to be answered. What did nationalization do? Basically, I'll just take two sectors, agriculture and industry. What has happened? What has happened as a consequence? Why was nationalization necessary? First of all, I see nationalization as part of the social compact that was arrived at soon after independence, and you can start with the Industrial Disputes Act of 1948. This was part of a social compact. So it was sold to the people. 1969, when nationalization started, this was sold as part of the social compact, which is why Indira Gandhi was spewing socialism. And so people bought that message. But actually what was driving nationalization was two. One, the Green Revolution, which effectively, accelerated commercialization in agriculture, required bank lending. And you saw a spectacular growth in not just lending, but also the spread. So today, when we talk about Indian banking, I mean, we don't seem to realize that there is no other country in the world which has this, not even China, has this kind of a network of banks and banking activity anywhere in the world, even now. So This made it possible for, agriculture, the spread of the green revolution technology to take place, particularly because it was a commercialized technology. It needed commercialization of agriculture to happen simultaneously along with the technology. It spurred commercialization. So that was one aspect of the thing, which is why it spread. Now, along with this, after the first few couple of decades of planning, you also had a large presence of small industry in this country. So banking not just had to cater to the needs of large industrial houses and public sector undertakings, but also to small units. So which again, you need a larger network of not just banks, but also banking credit expansion geographically as well as in quantum. So this is what happened. Now cut to 1991 and thereafter. But before this, I just want to make one point about this whole thing about privatization. Privatization is very often thought in binary terms. Has it been privatized or not? I don't think that is the way it works. I think those working for privatization are very, very patient, and they are in it for the long haul. So, I mean, they erode institutions, they capture institutions, they paralyze them, and finally they emasculate the public presence in various sectors. So privatization is not just like we have seen in oil, we have seen in telecom, we have seen in multiple sectors all across India now. And so it's not an on-off thing. It's a process. So this has also happened to banking. So increasingly today, even public sector banks behave in some ways as clones of private banks. So when SBI suddenly, charges higher service charges and user charges, what is that? If not trying to emulate what an ICICI or a HDFC or somebody else is doing. So this is the compulsion under which it is working. Now, after liberalization, the crisis in agriculture can be traced exactly to this process. A large part of the crisis, including farmer suicides, on which I have written a great deal, it can be traced to this single phenomenon of the collapse of institutional credit. So we have seen that. Today, roughly about 70% of operational holdings in agriculture are of holdings which are less than 2 hectares. So you understand the thing. Similarly, if you come to industry, and you will see this, and this is very, very important during this COVID phase, and we can understand the full-scale collapse of MSMEs across the country. And this is true of industry as well, that they have not been, this whole ecosystem of industry, especially driven by outsourcing boom since the late 80s. The whole process of manufacturing happens in clusters, like for example, automobile units. A whole lot of them are dependent on smaller units. For example, in Hosur, in Chennai, in Pune, and all over, Manesar, everywhere. So these are dependent on smaller units. So they are effectively in clusters. Now, if banking, so what has happened as a result of this is the starving of credit to these institutions, on the one hand from banks, and on the other by large units, which engage in a parasitic relationship with small units. They drive them to the wall systematically. If you ask any MSME, a small company, small unit, which is part of a cluster in which the larger one is at the apex, you will hear, I mean, this has been a perennial cry of the small industry that they have starved for working capital. So on the one hand, they are pushed to the wall by the large units because they don't settle their bills in time. They take very long. Ashok Leyland is a classic example of how this operates. So I mean, so all the large units do this all the time. Now, on the other hand, because their limits to credit is severely curtailed, especially after liberalization. Working capital limits are very quickly exhausted. They are driven to the wall. Now, what is the consequence for the economy? I mean, look at it from the what does it imply for industry? What does it imply for the national economy? Now, well, they are roughly one third of everything you talk about the Indian economy, whether you talk about exports, whether you talk about the GDP, or whether employment, everything, anything. So they are not an insignificant thing. So this whole process of liberalization, which has sort of made public sector banks, on the one hand, their operations have been curtailed, branches have been amalgamated, their spread has been restricted. There's been huge shortage of staff in public sector banks, and so on. So this has really accentuated this whole crisis in not just industry but also in agriculture. And so we see that a process of reversal of the gains of nationalization have already been in operation for some years now. So in this context, for example, this whole coronavirus, this COVID episode, for example, the crisis, the burden has entirely fallen on rural households, which are now currently, they're finding migrant workers going back to the villages, but without, gainful employment. And the MNREGA is completely, it is just stuck. Nothing is happening. And on the other hand, the MSMEs, the small units, are totally devastated. So you're in a situation where productive capacity is in danger of actually being destroyed. When COVID happened, when everything was shut down, you saw a simultaneous, this is unprecedented in the history of modern civilization, in the sense that you didn't see a simultaneous collapse of demand and supply at the same time, any time in history. Now, when this happens, everything is shut down, and so there is no activity. So production is effectively lost for that period. But when units can't come back, some of them will collapse, some of them will fold up forever, some of them will never wake up. And so what does that mean? So you are losing future productive capacity which can produce output in the future. That is lost. So if you don't provide relief, so in the whole COVID experience, what I wanted to show you was that this whole government policy has rested on the banks lending. So Nirmala Sitharaman says that this 3 lakh crore package for MSMEs is going to be implemented by the banks, but the banks are in no position to lend because the rules you have set do not allow it. So they're sort of, so it's not a matter of will. They're just unable to do it. So what they are effectively depending on a market-based reaction to solve a crisis which has emanated completely outside the market. There is no market when demand and supply collapse at the same time. Where is the market? Which economist will tell you what the market is doing? So this is what I wanted to highlight about this present crisis and this whole crisis of agriculture. Now, agriculture and industry, and in large parts of the country, the procurement activity has completely stopped. There has been virtually no procurement in many parts of the country. Whatever is being procured is only wheat and rice. Nothing else. You can set a minimum support price, but it is immaterial. It is completely notional. It is fictional, because if you don't buy at that price is just completely, it is just theoretical. It doesn't mean a thing. So farmers are being sold, are selling their produce at way below MSP prices on the one hand, and industries are shut, and banks are unable to act as a as a vehicle of trying to rejuvenate the economy. And that is the fundamentalism at work today. And I just want to about public sector banks. I mean, Dinesh gave a very large agenda, which I can't. Which is impossible to fulfill. But I just want to take up one thing about regulation and control. Uh, People ask, but public sector banks haven't functioned. They have also have their faults, and of course they have their faults. Of course they have had their faults. It's like asking me whether I'm fully satisfied with my child. I mean, how will I be ever fully satisfied with my child? I would have aspirations and I would have expectations. That's fine. Similarly, to ask that question in that fashion is stupid. To say, and we also have to understand that the logic of nationalization, as we have understood, is different from what the ruling elites have understood them to be. That is not our burden to carry. We have to understand this. That's why I said the 1969 and the process of nationalization, which happened it was sold to the people as part of the social compact, which came after independence, and we bought that. We bought into that argument. We bought because it was delivered in such a way in that context and everything else. And subsequent events did unfold in some manner like that. But that was not the entire agenda. The agenda was something else. So that's not our cross to carry. But regulation and control is, of course, necessary. I mean, if you ask me, I mean, this regulation is in the banking industry it's a double-edged sword, because if you ask me whether the banking sector regulator should be completely autonomous, I wouldn't agree with that, because look at Europe and look at how the regulator functions. The regulator functions completely independent of the aspirations of the people of Europe. It functions as if it is some technocrat body devised to protect the interests of the banks and their owners. And that's it. That is their primary interest. And so therefore, as we have seen in the last decade after the global financial crisis, and even today, that the wranglings in the EU today, as they're ongoing, wranglings over the nature of the stimulus for the COVID thing, are all reflect this thing, that you expect a technocratic solution to problems, and so you don't. So I don't believe that the regulator should be handed over the keys and he should tell us how the bank should be run. No, the government of the day should have a say in what should be the agenda of. That is, and if they are, there should be checks and balances, parliamentary oversight, parliamentary control, and should be stronger and more effective, and they should also be backed by statutory force. That is my thing. The other thing is that most of the banks, Comrade Franco will bear me out. I mean, most of the banks, I mean, although they are public sector banks, although they are supposed to provide employee directors positions, most of them are vacant. And they perform, I think unions perform a very important social function, apart from, their own, within the industry, their own demands, their work conditions, all of those are important, but they also perform an important social control and social oversight. And so I think I will end there. If there's anything else I can, so I think public sector banks have a role in occupying the commanding heights. This notion of this idea of selling, privatizing banks can only lead to chaos, as we have seen. I mean, a part of that, I mean, a trailer of that is what we have seen during COVID. What can happen when public sector banks' hands are tied and they are forced to function this way? Thank you.